So you have for each country. So if you don't know what the code is for the country you want to trade, just go on this list and you'll find it. If you want to go to the United States, you have USD, US dollar. Okay, and don't bother with these. Don't need to look at those. And yeah, so you have all these countries here, and you can just Google ISO code and you'll get to a bunch of different websites that have the same codes. Now, let's just go back to pound it in just a bit more. So if you have a currency pair of, let's say, USD CAD, and the price is 1.35, you would say that the base currency is USD, quote currency is Canadian. And so this is the quote for the USD against Canadian dollar. The quotation of 1.35 means that $1 US can be exchanged for 1.35 Canadian dollars. So keep this handy if you always get confused. But you know, by the end of this course, this for you is going to be something very simple. So not all currencies are equal. And when I say they're not equal, I'm talking about trading liquidity. So not all currencies are traded as much as one another, right? And you probably know that the currency that is the most traded is the US dollar. And it's actually the most traded when you compare it to other currencies. The second most traded one is the euro, and the US dollar is traded 3 times more than that around. So it's very, very liquid. Now, the countries or the currencies that are most traded, we call the major currencies. And this is the list of the major currencies here. Now, I didn't put them in order. It is true that the US dollar is the most traded one. The euro is the second, but I didn't really put these one in order. They might be, they might not be. But yeah, you have the Japanese yen. That's very much traded as well. The British pound, Australian dollar, Canadian dollar, and Swiss franc. So these are the major currencies. Now, because of that, we have what we call the major currency pairs, right? And these are just pairs that are very, very liquid. So very widely traded. So you're not going to find pesos to, I don't know, Japanese yen. It's not traded as much as these ones, okay? Or even pesos to something else, a country that's not even a major. So you have the pound sterling to USD, which some of these have like nicknames. So we call this one the cable. But you don't really need to learn those. You have USD CAD. People call it the loonie. The Australian to USD, we call it the Aussie, so Australian dollar. Then this is USD to Swiss franc, so people call it the Swissy. USD to Japanese yen, Euro to USD, and New Zealand dollar to USD. So these are the major currency pairs. You'll see these often, and you're probably going to start by trading one of these currencies, okay? Now, you might be wondering, why do they have USD CAD and not CAD USD? Or why do they have here USD first, and then here you have USD second? Like, can you trade them, USD to Euro or Euro to USD? Well, there's a convention, and the convention goes as this. And, this is outside of course, material, but it's just for your general information. Why do they do that? They have like a rule, and the rule is like, if there's a euro in the pair, the euro is going to go first. Okay. But then second, the pound sterling. So if there's a euro and pound sterling, then the euro will go first, pound sterling goes second. But if there's no euro, then the pound sterling is going to go first. Okay. So here, if there's not that, Australian dollar goes first. If not that, New Zealand dollar. If not that, US dollar, Canadian dollar, Swiss franc, Japanese yen. So this is like the rule that they have of which currency goes first. And this is, sometimes people, wonder, why is it like that? This is their convention. Now, for the other currencies, so let's say pesos or any other currency, which we call the minors, they're generally quoted against the USD, right? So you're going to see them next to the USD. That's how most people are going to trade them. Now, if you're not trading them against the USD, what we're going to call this pair is, we're going to call it a cross pair. Okay. So a cross pair is any pair that does not include the USD. So let's say, even if I'm looking at CAD, Japanese yen. Okay. So now you know what currency pairs are, cross pairs, major pairs, and we're ready to move on to the next lecture. So now that you know what currency pairs are, what are you going to do if you want to exchange a currency or buy or sell a currency versus another currency? We've already came to the conclusion that you're not going to go to the airport to exchange your currency there. You're not going to go to one of those foreign exchange shops. You're going to do it from home. Well, how are you going to do that? To know how you're going to do that, you need to understand the market structure in the foreign exchange world. The thing with FX is that it's a OTC market. What is a OTC market? An OTC market is a over-the-counter market, meaning that there's no central exchange where you go to transact on. It's not like the stock market where if you want to buy a particular stock, it's listed on only one exchange. Like let's say NASDAQ or New York, you have to go to that exchange to buy or sell that stock. In the FX world, it's not like that. If you want to buy US dollars, you don't have to go to the Fed's office to buy US dollars. You can do it anywhere with anyone. So it's over the counter. And because it's over the counter, execution prices will vary, right? This is a big thing. So if you want to buy some pesos, well, if you go to the airport, they might give you a really bad rate because they know you need it. If you go and you exchange it there in somewhere very touristic-y, it's going to be, more expensive. But if before that, like before I went to Mexico, I called a few shops here in Montreal and I started negotiating the prices. They told me, we're giving it to you for $14. And so I called somebody else. They said $14.20. I'm like, well, somebody else, I lied. Somebody else told me $14.30. Can you give me more? Okay, we'll match it. Okay, I'll take it. So, you can negotiate if you're doing something like that. But if you're trading online, the rates are going to be very thin. You can't call and negotiate. But depending on where you're buying from, you might have better rates, right? So it's important to know that the rates are not going to be the same everywhere. Now, the actual structure is like this. You have the interbank market, and the interbank market is where the huge banks transact with one another. Okay. Now, these huge banks, they can transact through EBS, which is the electronic brokering services, or Thomson Reuters. These are the two options. They basically provide a order book for all the huge banks, okay? And when I'm talking about huge banks, I'm talking about Deutsche Bank, UBS, Citigroup, Barclays Capital, RBS, Goldman Sachs, HSBC, Bank of America, JP Morgan, Credit Suisse, Morgan Stanley. The huge banks. These banks account for approximately, I think, somewhere between 60 to 70% of all the volume of all the transactions that happen in the FX world. Okay. So they have this order book where they can transact directly with one another. Okay. Now, this is only available for huge banks. You cannot go and trade there. It's billions and billions of dollars every second. It's huge amounts of money. Okay. So where do you come in? So